Hey, good morning, everyone. Happy Monday. Welcome back to the Valid Mortgage Arizona Housing Update, and keeping you guys informed and answering any questions that you guys may have. If you guys have any questions during the live stream, go ahead and drop it in the comments. I'll answer any questions that come through. Hopefully, they come through. But let's start with interest rates. Where interest rates are today. All right, so conventional 720 FICO with 5% down, a $600,000 purchase price. With 5% down, we are at 6.285, APR of 6.787. FHA FICO with the 780 or 680 FICO, so FHA 680 FICO with 3.5% down. We are at 6.197. Do keep in mind that unlike conventional, so we are able, the conventional loan limits did increase for 2023 to 726,200. We're able to actually close on loans with the new conventional conforming loan limit for 2023, but we cannot do that for FHA. But FHA did increase for 2023. So we'll be able to fall into that next year. So any loans closing in January going forward, we can fall into that. That is going to be a touch below 480,000. So that's good. But that FICO that interest rate for FHA is at 6.197, APR 7.261. VA 680 FICO. VA has never had they've had a conforming loan limit, but they don't have conforming loan limits. So the whole increase just really doesn't matter. So VA 680 FICO was 0% down, a $600,000 purchase price. We are currently at 5.895, APR of 6.149. So as far as interest rates, last Thursday, we had the wholesale inflation report came out, and that was a little bit higher as far as the inflation report. So we did get a little uptick in interest rates. Prior to that, everything was below 6%. We're looking at about 5.9, 5.8, 5.7 as far as interest rates across the board. So with that inflation report on wholesale coming out last Thursday, we did tick up. The big report that's going to come out tomorrow is the inflation report, consumer inflation report tomorrow, and that is really going to dictate where interest rates are going to go. If inflation has stayed steady compared to October, then it's going to be a good thing. If it's less than October, it's going to be even better. If obviously inflation is up, then interest rates are going to come up. We'll see how far they're going to come up with that. And we still have a Fed rate increase this month and a couple next year already on the books. The Feds did say that they're going to reduce or cut back as far as how much they're going to increase, but I anticipate seeing a 50 basis point increase this month, and then we'll see what goes on next year. But I think it's all going to be based around that inflation report that comes out tomorrow. So interest rates are looking pretty good. So let's jump into VA. Unfortunately, there's still a lot of VA misconceptions, myths, and just lack of understanding or education about the VA loan and how to properly help veterans and maximizing the use of their VA benefit. And so I did want to touch on that today a little bit. We're going to talk about eligibility, seller concessions, and VA appraisal. All of this is going to be very surface level. So if you guys have any questions about your specific scenario, and this is all just obviously because of time, just want to be focused on not spending too much time diving into the guidelines, but it's all going to be surface level. But if you guys want to talk a little bit more about your specific scenario or have questions that require more time, email me, give me a call, put it in the chat, and we could set up an appointment on another time to have that conversation. So eligibility, let's look at eligibility here. So you have two different things. You have veteran, so somebody who's served in the military, who's no longer in the military. You have active duty, and then you have guard or reserve members. Okay. Veterans is pretty easy in a sense that, as long as you can obtain what's called a certificate of eligibility, which is your golden ticket, I say this quite a bit when I make my videos and put it out there, is that you are not pre-qualified for a VA loan unless you have a certificate of eligibility. Does not matter if you make $1 million a year and you're going to put $200,000 down and you have a 20% debt to income ratio. It does not matter. If you do not have a certificate of eligibility, if your loan officer cannot pull a certificate of eligibility from the VA, you are not pre-qualified for a VA loan. And so to go back to the certificate of eligibility is your golden ticket. It is going to say if you are qualified or not qualified. If you are a veteran and you have met the character service requirements, meaning you've had a honorable discharge, anything other than honorable may disqualify you for using the VA loan or the VA benefits. And if you've met your time in service, meaning that you've had 90 plus days of active duty service, basic training, AIT, or tech school typically does not count towards that, then you should be eligible for a VA loan. If you are active duty, again, basic training, tech school, or AIT does not count towards it. But if you have served at least 90 consecutive days on active duty and you're still active, you more than likely are going to be eligible for a VA loan. Now, there's going to be some requirements that surround your term in service. You obviously have to have enough term in service, or you have to have the eligibility to re-enlist or express the intent to re-enlist with the military to still use your VA loan benefit. So active duty, very simple. As long as you're in the service and you have the eligibility to re-enlist and you intend to re-enlist, then you can use your VA loan. We may need what's called a statement of service. Very unlikely that we're going to need it, but we may need to get a statement of service from your commanding CO with active duty. Typically, we don't need that, but sometimes we need that. So those are going to be the two factors with active duty. As far as a guard, the guard and or reserve member, it does get a little, I wouldn't say it doesn't get dicey. It's a very simple explained process, but it gets confused. A lot of people get it confused with that. You either A, have served 6 years as a active duty as a reservist or guard member after 6 years. And if you've accumulated enough points, then you will be eligible for the VA loan benefit. You will have to obtain what's called a NGB Form 22, and that's going to be, either the state and or your commanding officer that will be able to assist you with showing your length of service or your record of service and your points that you've accrued, and then you will be able to pull a certificate of eligibility and use your VA loan benefit as a reservist or guard member. If you're a reservist or guard member and you've been activated on Title 10 orders and you've served 90 plus days on active duty and you have a DD Form 214, then you'll use that DD Form 214. We'll be able to pull your certificate of eligibility with that. And then obviously you'll be able to use your VA home loan benefit. So again, just very surface level here, but at the end of the day, whether you're a veteran, you're active duty, you're a reservist or guard member, make sure before you start shopping for houses or you put an offer on a house that you have a certificate of eligibility through the VA or your loan officer has a certificate of eligibility, because without that, don't pass go, don't collect $200. You're not getting anything from the VA loan. So just make sure you get that squared away as far as your eligibility. All right, let's talk about seller concessions here. Huge misnomer, and this is not just loan officers not understanding this, realtors not understanding this. I even have underwriters that do not understand the VA guideline when it comes to seller concessions. So to show that I'm just not blowing smoke and making things up, this is all from the VA handbook. And so when they talk about seller concessions, here on section B, seller concessions include but are not limited to the following: payment of the buyer's VA funding fee, payment of the buyer's property taxes, insurance, gifts such as television set or microwave oven, payment of extra points to provide permanent interest rate buy downs, provisions of escrowed funds to provide temporary interest rate buydowns, and payoff of credit balances or judgments on the behalf of the buyer. So here's the thing that I really want to highlight, and we can talk about this really quick. Seller concessions do not include payment of the buyer's closing costs or payment of points as appropriate to the market. What does that mean? Well, FHA, conventional, VA, I apologize, let me back up. FHA, conventional, they have a max seller credit or seller concession that can be contributed to the buyer, okay? FHA is 6% of the purchase price. Conventional is 3% up to 10% down. Once you put 10% down, you can go up to 6%, 20. If you put 20% down, you can go up even more as far as seller credit. So conventional is tiered based on your down payment. VA is totally different. Okay. They make a distinction between closing costs and concessions. The seller can pay all of the veteran's closing costs. Okay. And that includes appropriate to the market discount points for an interest rate. They have an example here. If the market dictates an interest rate of 7.5% with 2 discount points, the seller's payment of the 2 points would not be a seller concession. If the seller paid 5 points, 3 of these points would be considered a seller concession. So again, the VA makes a very, very distinct difference between closing costs and concessions. So if it's all customary closing costs can be paid by the seller. In addition to all closing costs paid by the seller can contribute up to 4% of the purchase price to the buyer or the veteran to help pay additional points, pay off credit cards to help them qualify, pay off judgments to help them qualify, and any other things that we can use to reimburse for the earnest deposit, reimburse for the appraisal, to pay for the appraisal, to reimburse for home inspection, termite inspection, a long list of items that those seller concessions can be used. So make sure that you're working with a loan officer that really understands the VA guidelines when it comes to seller concessions. Again, they make a very distinct difference between closing costs and concessions. Closing costs are customary closing costs to a loan, even if it does include 2 discount points for an interest rate. If you are paying 2 discount points for a 7.5% interest rate, you're getting screwed and you're getting bent over pretty bad. I suggest that you reach out to somebody else. Obviously, I encourage you to reach out to a mortgage broker in your state because they're going to be able to help you get a much, much better deal than what that whole example is right there. But this example does happen by big corporate mortgage companies. So that's a side note. So, your seller can pay all of your closing costs plus an additional 4% in seller concessions. So make sure that your loan officer you're working with understands that. If you guys have any questions about that, obviously reach out to me with that. So the big one that I see all the time, the reluctancy, I don't know if I want to a seller thinking that, or a realtor telling their seller, you need to think about accepting a VA offer. And really it comes down to one of the big ones is the appraisal. Everybody feels that the VA appraisal is a lot stricter. It's a lot harder to get through as far as the process. The property is not going to qualify, so on and so forth. You say it. It's probably been stated as far as from a realtor and or a seller. So you need to understand is that the VA appraisal, they come from a standpoint of safe, sound, and sanitary. The MPRs or minimum property requirements helps ensure that the property is safe, structurally sound, and sanitary. The scope of MPRs also includes issues related to the property's location and legal considerations. So to kind of give you a very broken down in simple things, what they look at as far as, I apologize, let me go back here. The VA minimum property requirements, this is what a lot of people is worried about. The minimum property requirements are that there's working electric, heating, and cooling system, that there's adequate roofing that will last the foreseeable future, that they're sufficient in size for basic living necessities. It's clean, continuous water supply with sanitary facility. It's free of lead-based paint, free of wood-destroying insects, termites, and safe and sanitary sewage disposal, accessible from an all-weather public or private street. Attics and crawlspaces must be accessible and properly vented. So the VA is not going to sit here or the appraiser is not going to sit there and pick apart the house as far as cosmetics, right? Oh, well, this paint needs to be touched up. This baseboard needs to be touched up. If you have wires hanging out, if there's holes in the wall everywhere, they're not structural. We can actually ask for waivers as far as items like that, but it is a good idea for certain things to be asked to repair. So the VA comes from a standpoint of safe, sanitary, and sound structural. And that's really what they look at. Cosmetic, they do not, although it does happen, they do not require the appraisers to note cosmetic repairs or cosmetic items. Although those are a lot of the times that what is put on a VA appraisal is cosmetic items. If it's a cosmetic item, it's not, again, falls under the MPR list of items. We can ask for what's called a MPR waiver, a minimum property requirement waiver. 8 out of 10 times, those are usually going to get approved by the VA, and then we don't have to take care of them. So again, with the VA appraisal, there's a lot of misconceptions that the appraiser is going to tear apart the house, require all these repairs, so on and so forth. Again, it just comes down to, the VA does not want the veteran to move into a house that needs to be structurally repaired, or sewages need to be repaired, water needs to be repaired, the roof needs to be repaired. They want the veteran to be able to move into a house that is livable. And if they have to make cosmetic fixes, then that's fine with them. So understand that, if you are a seller and you're looking to, accept a VA offer, first and foremost, reach out to the loan officer, see if they are, well educated on the VA loan process. If they are, this transaction is going to be very quick and easy. They're going to be able to get through any VA issues that may come up as far as the appraisal with that. The other thing to note is that the VA appraisal is very unique. It's not like conventional and FHA. Before the appraiser actually goes out to the property, they're going to do their due diligence as far as pulling comparative sales in the area. If they feel that the property is not going to appraise for the sales price, before they even go out to the property, what they'll do is they'll reach out to the loan officer and the real estate agents and let them know that they are initiating what's called Tidewater. Tidewater was initiated early 2000. And what that does is letting everybody know that we have a potential low appraisal. And what we have 48 hours to provide that appraiser additional comps and or a list of upgrades or reasons why the house should sell at this price to help improve the appraised value. It doesn't always work, but a lot of the times the Tidewater process and the whole process of us assisting the appraiser with additional comps, list of upgrades, and information does allow us to get to the appraisal, so we don't have to go through that whole low appraisal process. If we do have a low appraisal, we have another alternative, and it takes the appraiser out of the equation, and we can go directly to the VA, and we can do what's called the reconsideration of value process. Again, we go through that process. I work with the agents and we work with the VA as far as providing additional comps, upgrades, so on and so forth. And we can get that higher appraisal, most of the time. I think last year when I checked, about 64% of the time when a reconsideration of value was submitted to the VA, it was approved. And we saw an average increase of $25,000 in the appraised value. So it doesn't mean that all of them got to the sales price, but we did see an increase of appraised value 64% of the time, allowing us to help, to move forward the transaction to where the buyer isn't having to come out with more money, or the seller's not having to take a big, huge hit with that. So that's the VA appraisal. So, really quickly to wrap up, VA, it's a great loan. I'm a veteran myself. I love working with veterans. It's a really good loan, but unfortunately there's a lot of misinformation, a lot of uneducated people out there that are spreading, bad information out there. The VA eligibility, again, get your certificate of eligibility. You are not pre-qualified for a VA loan unless you have a certificate of eligibility. If you have any question as far as if you are eligible, any loan officer or I could help you. I could try pulling your certificate of eligibility through the VA system. Very simply, give me an email, phone call. I can help you out. If you don't have a certificate of eligibility, there is a process to get you eligible, to get you that certificate of eligibility. Again, I can help you with that process. With that, as far as seller concession, remember the seller can pay all your closing costs, and in addition to that, 4% towards any type of paying off any balances on your credit cards, judgments, additional repairs, or whatever have you. And as far as VA appraisal, they're not as hard as they think they are, as everybody thinks they are. They're a very good appraisal process and get done in a timely manner within about 10 days or so. With that, all right, guys, thanks for joining me again, and hope you guys have a good week. If you have any questions, always reach out to me, and I'll talk to you guys next week. Thanks.